Welcome, everybody, to the inaugural edition of The Nest. My name is Jim Chu, and I'll be moderating today's discussion. Thanks you all for joining us. First of all, I should note that this is being recorded, and we will be distributing this online. So please, no profanity or insults unless they're directed at me. Also, we'll be having more entrepreneurs join us next week and the week after, and hopefully the week after that. So if you like this, please spread the word to entrepreneurs, to angel investors, and to those who just want to watch. With the coronavirus lockdowns worldwide, I do hope that this will make confinement a little less boring. But before we get started, I'd like to cover a couple of basic technical tips for us. So first of all, if you are not speaking, please mute your microphone so that we don't hear everything that you say. If you notice, you came in muted, and you can unmute by clicking on this button on the lower left-hand corner of your screen. I believe most of you figured that out. Also, we'll be allowing questions from the audience. So if you have a question or a comment, please feel free to write them down in the chat box, and we will review them and read them out loud as necessary. Maxime Servatas, who is also online, will be reviewing the questions, and feel free to shout out anything pertinent as you see them come through on the chat box. Finally, you likely see a whole bunch of different screens on the video. So if you want to see just the person speaking, you can click on the center button here in the video box, and that will show only the person who is speaking. Or if you're tired of seeing me, you can always just click this minimize button, and that screen will go away altogether while you can still view the shared desktop. So on that note, I like to get started. The first entrepreneur presenting today will be Insect Pro. The second will be, actually I'll go through on that presentation. Let's talk about the business angels first. Well, so first of all, there is myself. I'll do a quick introduction of myself. There's also Piers Clark and Vincent Robert. A quick introduction of myself. I'm the founder of Untapped in Delo, Haiti. I do a fair amount of angel investing, mostly in technology companies, but I've also invested quite a bit in social impact ventures in the developing markets. One of my interests is in helping entrepreneurs find the CapEx financing to make their entrepreneurship or their businesses thrive. So that's my approach. And I hope to find different partners through this forum to work with in the future. Should I hand it over to Piers? Piers, would you like to say a few words about your background?
Can you hear me now? I've just taken myself off.
Hear you now, yes. Go ahead.
Brilliant, thank you for that, Jim. I don't know whether you can see me on video. I prefer that you looked at me on that photograph because that's clearly about 10 years ago before I aged considerably. I am, as it says there, I'm a water person. I'm a scientist by first degree, PhD in civil engineering, in particular around public health. And I've worked for a number of consultancies and big water utilities. I was the commercial director for Thames Water, which is the water utility that serves London. I'm currently the chairman of a technical consultancy called ISLE, which employs about 100 people and works with something like 300 or so water utilities around the world. So we've got offices in South Africa, Australia, and North America, and places like that. So we're a small business, but spread very thinly. And we have invested, we tend to give 25% of our profits. We invest in entrepreneurs in developing and emerging countries, particularly ones who work in water and sanitation, but not strictly ones that work in water and sanitation. And it's terrific to be on this group. Thank you.
Thank you, Piers.
Vincent?
Hello, so I'm Vincent Aubert. As you can hear with my terrible French accent, I'm from this beautiful country. At home, like most of you probably, now already for close to 6 weeks. So I really applaud your initiative, Jim. I think it's a great idea to give us this opportunity to review some business and hopefully we can help them in some ways. Now my background, I'm a father of 4 kids and now already a few grandkids. So that gives you an idea of my age, just past the 60s. So I used to work in the beverage, as you mentioned on the chart, for many years as a head of the international business of Orangina Schweppes. And before that, I spent about 10 years at Danone, at the board of the water business, managing the export business and a lot of initiative in new countries. And prior to this, I worked for an American company, P&G, for about 15 years in various geographies and in sales. So for the last few years, I've been investing in about 12 companies that where I'm more or less involved. And I set up a few NGO mostly in education. And now my focus is really around, I'm trying to move away a little bit from education and focus more on new energy and on helping the important transitions that we have to do to help our planet to do a little bit better than now. That's about it.
Great. Thank you very much for joining the show and taking the time and for the introduction. On that note, I'd like to move on to introducing the entrepreneurs. We have Talash, Emilian, and Tesh, who will be joining us. And they will be introducing themselves and their companies in a bit, so we won't go through that. I should note that we will be having this every week and week after, and so we really encourage entrepreneurs such as Talash, Emilian, and Tesh to submit applications through the website, findthenest.org, and hopefully we can find and discover a lot more interesting ventures and inspirational entrepreneurs around the world. For a quick summary of the format, just to give you an idea, we will have a 5-minute presentation, and we'll be very strict on the timing, so you will be cut off at 5. And then we will have a 5 to 10 minute question and answer session and discussion with the panel. And we are open to questions from the audience, but only if time allows. And then hopefully we'll be able to talk about potentially making a deal. So everything is open, everything is possible on the show. So I encourage you to think out of the box and ask for what you need. On that note, I'd like to hand it over first to Talash and her company, Insectipro. I'm going to stop my sharing. Hold on, if I can. And hand it over to Talash. While you are putting that up, oh, there you are, very fast, very fast. Looks like we have a poll going on in the meantime. We will leave the poll up and let people talk about that until we go on to the next one. Excellent. All right, over to you, Talash.
Thank you, Jim. So as you all know, my name is Talash Hybers, and I'm the founder and CEO of Insectipro Limited, and we're based here in Nairobi, Kenya. We want to make Africa more food secure through creating profitable, sustainable, circular food systems with the help of insects. Why insects? Because we see the beauty within the beast. So why are we looking to change the food systems? Which food systems are we focusing on? Why are we doing this? So as you can see, the population of Africa is expected to double by 2050, and this is related to an increase in food demand by more than 50% and almost up to 100%. This is a front end of the chain, but we also have to look at the back end of the chain. The back end of the chain shows that in Nairobi city alone, more than 2,500 tons of organic waste are produced daily. And in sub-Saharan Africa, this is expected to increase threefold by 2050. So the food chain that we decided to focus on was the animal feed industry. So currently, animal feed makes up more than 70% of the cost of production here in Kenya. And of that feed, more than 60% of the cost is based on protein. So current sources of protein are fish meal, soy, and things like sunflower seed and cotton cake. The main ones, fish meal and soy, are not available in large enough quantities. They have to be imported most of the time. And in terms of soy, the protein component is really low, so you have to add other things to balance it out. And in terms of fish meal, the protein component is very high, but it's also very expensive. Our solution is the black soldier fly. The black soldier fly is this incredible little insect that can take organic waste and break it down into 4 different products. For protein, fertilizer, fat, and chitin. Compared price quality to fish meal and soy, it's a better option. And they have such a fast life cycle that in 14 days, the product is ready for harvesting and processing. So our system looks a bit like this. We go to a lot of the big industries here in Kenya, so the people who peel potatoes, the people who bake bread, and the people who make beer, and we collect their waste. We take this waste, we put it into a recipe, which we then feed to our bugs. The bugs are then sorted into either fertilizer and chitin or into protein, which then goes into livestock, into meat, human consumption, and the fertilizer goes back to the field. This for us works. It's also how we're helping close other food supply chains. So we help them get rid of their waste so it doesn't end up in dump sites. And we help them create fertilizer, which then goes back into the field. Like I said before, our products are fertilizer, protein, chitin, and oil or fat. So what does our model look like? So our model is centralized and decentralized at the same time. We have central egg production and manufacturing because those are the most expensive steps and also the most difficult. In egg production, it holds more than 90% of the risks. But once the eggs are 5 days old, nothing can kill them. So currently, most of our eggs go into our own rearing system, but a percentage of it goes out to farmers who can then use it to directly feed to their fish, or we have a buyback model. This allows us to increase our capacity without increasing our centralized capacity, but it also allows us to help the farmers bring down their costs immediately. So when we started with 2 kilos in 2018, and right now we're up to a capacity of 1 ton a day, and we're growing towards 5 tons a day. We started with myself, and currently my team is composed of more than 50 people working flat out to work on the outdoor model, but also increase our own capacity. Our expansion plans, as we're looking at it now, is we're going to expand our Nairobi facility to a 5-ton facility. We want to build a facility in Kisumu in Western Kenya. We want a facility in Uganda, and we want a facility in Rwanda based on population in those cities and also based on the amount of waste coming in. So do you also see the beauty within the beast? We would like to work together.
Myself. Well, thank you very much, Talash, for that great presentation. I hope, and Brian Dolan says applause, so I think we should all applaud. Thank you. So I'd like to hand it over to questions from Piers and Vincent, and I also have some questions. Who would like to start first?
Yeah, I'm happy to go. So Talash, I've got two questions really. One is, I know other people have done something similar to this before, and I'd love to hear your perspective on what others have done, what they've got right, what they've got wrong. What are you learning from your competitors, and have you got a sort of unique edge to it? The second one is what could go wrong here? This is all about understanding the downside. So I have, maybe wrongly, but in my head I've got, what happens if the eggs if you don't stop the eggs soon enough and they turn into 1 billion flies, what do you do then? Or am I worrying about something that could never happen? And just give me some reassurance around what's the worst that could happen if things went pear-shaped on you?
The worst thing that has happened, and it's happened to our biggest competitor in Kenya, is that they faced colony collapse. But like you said, that was a very good learning point for InsectiPro. So we took our egg system we have our elite colony, so our mother stock that keeps on running. But we already have other locations where we're producing eggs that if anything happens to these ones, we can take immediately from there. But what we also do is genetic mixing in. So we take from our other facilities around the country and we bring the eggs and put them back into our system to ensure that you don't get funky flies, with wings that can move. And then that's how we're assuring. The thing about 1 billion flies, the reason why this insect is trending around the world is that they don't have a mouth. So they're unable to spread disease once they're a fly. And because they can't spread disease, they're not a danger for, malaria or carrying cross-boundary diseases. But they also can't eat, which means that they die within 7 days. So they just become flies, they lay eggs, and then they die.
Excellent. All right. Thank you for that. That's very good. Thank you.
So, Vincent speaking. Alash, thank you for the presentation. For me, it's kind of Chinese because I really am not familiar at all with your business, but looks like it's a very promising business. Now, I have as well 2 questions. First, when I look at entrepreneur and small or starting business, startups, I'm very interested to know your background and what you've done before and how did you end up doing this kind of activity, which I find really interesting. That's my first question. And my second one would be to have some idea on your financials. So what kind of turnover do you do today? What kind of gross margin, net margin do you have? And what are you really looking for in the future?
Okay. Who am I? I studied international food and agribusiness in the Netherlands, so I have a strong agricultural background. That's also because I grew up on a farm, a horticulture farm, but still a farm all the same. And how we got interested in this is we actually wanted to farm fish because we see aquaculture as a next frontier in livestock production. So when we were looking into how to farm fish, we came across the fact that unless you're farming a few tons a month, it's not profitable. And the reason is because of the feed. So then we looked into what component of feed is the most expensive because we're thinking, okay, maybe we can replace that with something cheaper. But protein is really hard to replace because it's a building block for the animals. So we're like, let's grow proteins. So one of my dad's companies, he grows insects, but insects for biological pest control. So we started running a bit with insects, and that's how we ended up on this little fly. And then the financials, currently we're at 80 cents a kilo. That's a production of 1 ton a day. And we're selling for around $1.20, $1.10, depending on the customer. When we go up to 5-ton production, we cut our costs in half. So that takes us from a profit margin of 33 cents currently to a profit margin of 73 cents a kilo times 5,000 kilos a month.
And what are your current revenues today on that topic?
We just scaled commercially a month ago. So currently we're outputting, it's around $1,000 a week.
$1,000 a week.
Yeah.
So you're looking at, okay. And what are your running costs per month?
Our running costs per month are around $15,000.
$15,000, okay. And how much have you raised so far from whom?
Right now we've raised $450K from private investors.
Okay. Great. So one of my questions is, and I appreciate Vincent, your question about who you are, and I think so much of this is coming down to the entrepreneur and whether you're truly committed to the longer term vision or not. It's easy to give up. It's easy to give up because things can get hard. What motivates you? What makes you want to do this? What makes you want to work through the hard days, the hard months, the hard years?
We have two big motivational factors. My team and I, we really believe it can make a difference. And I thought I was crazy, but now we have 50 crazy people working together. And we've tested our product a lot. So our neighbor, he has 62 pigs. And last year when we were starting this, we're like, we're not going to start this because, Google can be all nice and pretty, but we want to see it in action. So we went to our neighbor and we said, can we have 10 of your pigs and we try a BSF, an insect meal replacement? And he said yes. And in Kenya, in the region where we're in, it's really cold. So pigs take between 6 to 8 months to grow. But the pigs that were eating the insect meal-based feed, they were growing in 4.5 months. So our farmer was extremely happy in the growth time. For him, it cut costs of 2 weeks. And we continue running trials there. He's happy. We're already seeing very big differences at the endpoint. I think it's because, like I said, I come from a family of farmers. So you can already see the kind of struggle. It's really deeply embedded in our agricultural blood.
Okay, interesting. So I believe in this market. I think obviously food demand is going to go up through the roof, and being able to grow enough feed and so on for the agriculture is important. But I'm sure there's competition. I believe Sanergy is a competitor in this field, and they're a bit of a donor darling. They've raised a lot of money, and I've done, I believe, quite a bit. I don't know what they've done in this field specifically. How are you going to win against them? How are you going to exit? As an investor, obviously I'd like to see the impact, but I also want to see my money back. I want to make some money. What's your exit strategy, and how are you going to beat out your competition in that exit strategy?
The first thing, or the thing that we're really good at, is egg production. A lot of our competition struggles very deeply with egg production. Also, the way we've done it, the way we've kept costs so low, because other competition of ours, especially in Europe or in South Africa, their running costs are around $2 to $3 per kilo, which means they're selling their product for very expensive. We took the most low tech, we completely Africa-proofed our system. So we have a lot of tech in place, but all of it is extremely low tech. It's easy to replicate and it's easy to manage. So we have no, high-tech systems that if the power fails and we lose all our eggs, we are under greenhouses, we're in warehouses. So I think how we beat our competition is that we really Africa-proofed our system, and we've taken a more collaborative approach, because the industry is very secretive. It is a new industry. I understand everybody's trying to figure it out as they go, but we are really good friends with another company in Rwanda, a few companies in Kenya, and a company in Uganda. So we share tech, we have a non-competitive for each of our own spaces, but we're tech sharing, we're all learning from each other, and that's how we're trying to increase production and grow our companies.
So you're ganging up against Sanergy.
We're kind of.
Okay, very good.
Yeah.
I like that.
Back to Piers and Vincent. Any other comments or questions? If not, I'll open it up.
Just a very quick one. So can you, maybe I missed it, can you just clarify the revenue, the costs, and the profit at the moment? Those three numbers.
Cost is 87 cents per kilo.
Oh, no, sorry, for the
dollars.
business. If we looked at the business as a whole at the moment, are you making a profit? I assume not. Or what's your burn rate?
We just started making a profit. We didn't burn. We used around $300,000 to set up, because it is to grow big, you have to invest a lot in it. But we have started making profit now, and by next year, August, I believe, we're going to break even. And with our outdoor model, we're working together with a private Dutch company to develop it, and it's half privately funded by us and half funded by them. So it's given us a lot of opportunity to scale very quickly outside of our current budget.
Okay. All right, thank you.
Vincent, any additional comments or questions?
Well, I would have many, but I think time is running. No, I don't understand what you're saying, because you're saying that you are making about turnover of $4,000 a month. But you have I don't know, there is some noise.
Oh, there is some noise in the background here.
Okay.
Go ahead.
Okay, it's fine. So with a turnover of $4,000 a month, which is the current running rate, and I understood that you had some cost of $15,000 a month. That means you keep burning some cash today. So I'm not very clear about your financials.
So for the past 2 years, we focused on.
Didn't step out first. He sent out a bell.
Hold on, guys. I'm going to mute everyone else, and then.
So for the past 2 years, we focused on scale. We're not yet at the scale to make it fully profitable. So that's what we're looking for right now. Is we need big investments into more drying technology. Our dryer is only capable of doing 500-600 kilos a day, and we need to be doing 5,000 kilos a day. So we've already taken the dryer that we have and modified the technology. It's now to take this tiny thing and make it a lot bigger. So it's about increasing capacity.
Okay. We're running out of time. I think I'd like to open up to a couple of questions, 1 or 2 questions from the audience. But then we'd also like to hear from you, Talash, while we're waiting for those questions. What is your ask? What would you like? What would you like to see? How can we help you, if in any way? What do you like to see from investors?
We like to see 2 things. We like to see people who can help us not only with cash investment, but also with knowledge investment. So we're looking for also people who are knowledgeable about sanitation, about business strategy, especially in expanding to other countries, but we're also looking for 250,000.
And what will you do with the 250,000, and what do we get for it?
125,000 is going to go into our new dryer that has a capacity of drying 600 kilos an hour. And the rest, the other 125, will go directly to funding our second facility in Kisumu. And you get 5%, but we would also like to have a buyback clause.
Okay, so 5% for 250,000. Did I hear that correctly?
Yeah. Yeah.
Gotcha. All right, so I believe there was a question or a couple of questions from the audience. Maxime, would you like to read some of those questions? Or I believe also Cuthbert Ayo had raised their hands as well.
Okay. Yeah, there were a few questions from the audience. One was about the waste collection. You said you collected waste from beer factories or potato factories. How do you collect this waste, and how much does it cost you to collect it? And another one was about the team. We heard a lot about you, but we don't know who is working for you, and we're working with you into making it possible.
Okay, the first question about waste collection. We do a portion of it ourselves, and a portion is done by a third party who is very good at waste collection in Nairobi. Waste is currently, most of our waste except for the beer waste is free. So our waste collection cost per kilo is around less than 0.5 shillings. So that's 0.05 dollar cents per kilo. And the second question about my team is directly under me, we have a product innovation manager, and she actually focuses on our second product, which is crickets, but she also does a lot of product innovation in terms of chitin, which is one of the most interesting sub-projects we have. Then we have a COO, our chief of operations, and he's an industrial engineer, so he knows what he's doing in terms of machine design, he knows what he's doing in terms of extruders and in terms of building design. And then we have a business development officer. And the rest, most of our team comes from agricultural colleges around Kenya. And then our advisory committee is composed of a few successful entrepreneurs, but also people who are very good in finance and grant money raising.
Very good. So, Piers, Vincent, what are your thoughts on potential investments or next steps with Talash?
Okay, for me, Talash, I think you are probably doing a great business, but I'm really too far away from this kind of business to be in a position to nor finance anything, not even to help you, which I would love to. My advice would be pretty useless because I really don't know anything about this. I'm really sorry. I think you are working on a very interesting sector, but I'm totally ignorant of the sector. I'm sorry for that.
No, that's fine. Thank you.
So I think Anthony Kilbride put a comment on the chat, which captures all of this. He said he used your quote, deeply embedded in our agricultural blood, and said, you know, this is passion you can invest in. The strongest thing here that's coming across so well is that you know this sector, you love this sector, you're driven, you'll get through the difficult periods because of a personal passion, which I think is incredibly impressive. Actually, while you've been talking, I've emailed on to a family fund that I know that's actually backing another protein from insects type business. I think they might want to be able to talk with you, and I'd love to see whether we can make some magic happen there. But I think you've got a really interesting business model, and thank you for sharing it.
Thank you for your comments. I look forward to seeing your email and talking more about this subject.
So from my side, Talash, I mean, I want to echo what Piers said. You know, I think one of my beliefs is that if you back the right people, they will do something with your support. And I think I don't understand the market very well, but I certainly would love to learn. I think the future of food, especially in Africa, is important, and I would certainly like to understand. I don't know enough to put in a large ticket, unfortunately, but what I'd like to do is to make an offer for a small ticket for you, from my side, with the potential of something larger in the future once I learn more, once I learn more about you and your company, your team. So I would love to offer 25,000 on the terms that you mentioned. Obviously, it is a far cry from your 25,000, but I certainly think this is something I'd love to support and I'd love to learn more about. And it's the cost of my education. So love to speak to you offline about that after we are done.
Perfect. Thank you so much.
Thank you. Great. Well, thank you, Talash, for a wonderful presentation and discussion. And thank you, Anthony Kilbride, for the comment. I think you're absolutely right. It is passion that we can invest in. All right. I would like to move on to the next. And by the way, we have some online polling here if you haven't seen. And if you don't mind, Talash, with your permission, I'd like to share the results of the poll from the audience. Now, obviously, this is a theoretical poll, but the question is, how much would you invest in Insect Pro? Do you mind if I share that with the results with everybody?
Yeah, sure. Go ahead.
Okay, great. I'm going to end the poll now. Has everyone voted? If everyone who wants to vote, please vote. We have 29 of the 67 participants who have already voted. I'll give you another 10 seconds to vote, and then we will share the poll with everybody. And while we're doing that, Emilian, if you can start preparing your presentation, that would be fabulous.
Sure.
And I will share my screen while we are doing that. So all of you guys. Okay, poll is ended, and we're going to share the results now with everyone. We should all see the results. Interesting. We have several who would invest quite a bit in your company, and several others. Talash, if we wanted to find out more about your company, you and your company, and get in contact with you, how would we do that?
You can send me an email. I'll add it to the chat right now. And also, you can check out our website.
Which is?
Insectipro.com.
Excellent. Thank you very much. Fabulous. On to the next presenter, who is Emilian Popa from Elara Health. Without further ado, please feel free. I'm going to stop sharing mine, and you should be able to share yours now.
Thanks, Jim.
Oops, it did not did not end. Hold on.
Okay.
Yeah. Did that go over?
Yeah. Can you see my screen?
Yes, we can.
Excellent. Cool. So I'm going to kick it off?
Yes, please do.
So hi, I'm Emilian, and I'm the CEO and co-founder of Elara Health. And this is Dr. Boniface, who runs a small clinic in Karanguare in the outskirts of Nairobi. And when I met him the first time when I came to Nairobi, I asked him, what would you need to better do your job? And he immediately told me I would need a small lab. And that was an aha moment for me. And since then, I visited, why it's not my, okay, sorry. Since then, I visited over 500 clinics and pharmacies. And as you can see, the quality is shockingly poor. 70% of medical decisions require some kind of diagnostics, such as basic blood test. But there are more than 500 million people in Africa who today struggle to access or afford a simple blood test. That's only half of the story. Each year, there are 3 million people who die across low to mid-income countries because of a lack of access to care. But there are 5 million people who die because of low quality care. At Elara Health, we make diagnostics more affordable, accessible, and accurate in Africa in order to bridge this diagnostics gap and improve the quality of care. And the way we do this is by harnessing the developments in point-of-care diagnostics. What you see on this slide, this exponential development in smartphone medicine and digital health has brought us to small, affordable, and accurate devices to replace the bulky, expensive legacy machines that have historically been completely out of reach to the facilities we target. So at Elara Health, we do 3 things. First, we partner with those third-party manufacturers of diagnostic equipment. Second, we distribute this bundle of devices last mile on a 24-month subscription contract to those small peri-urban and rural clinics and pharmacies where 70% of patients live. And third, we integrate those facilities and the devices into a technology platform that we build using an EMR as the basis for patient disease management. So from the patient perspective, we have created this closed loop that manages the full patient journey from the initial contact to the facility to remote disease management through our technology platform and back to the medical facilities when further tests and treatments are needed. So you probably know that there are a few major reasons patients visit a primary health center in Africa, including those 4: diabetes, cardiac diseases, respiratory infections, and pregnancy. And our first devices cover them all. From infections and inflammations and reproductive health, we're moving into pediatric and metabolic health and later into cancer, where every ounce of precision matters. And we target areas that are previously not addressed in the facilities we target, and therefore creating new markets. And doctors love working with us because not only that we help improving the quality of care, but very importantly, we help them grow their business. We help them making more money. And that's a massive market. There are over 200 peri-urban clinics and pharmacies out there. And just the 8 individual tests that we covered today are over $1 billion market. And it's interestingly enough, this market is poised to grow exponentially because previously inexistent diagnostics are introducing the market. And in 5 years, we plan to hit 10,000 facilities, generating $50 million in revenue with a 70% gross margin across our products. Today, we're in 60 clinics, all of them in the outskirts of Nairobi. And by the middle of this year, we aim to expand to 200 clinics and pharmacies. And this 30% quarter-on-quarter growth is aggressive but sustainable. It's driven by a massive interest that we see in the field and by our sales team converting those single facilities, but also network facilities at an increased rate. And in terms of what does it look for Elara, our target monthly recurring revenue, which is today $250, is increasing and is driven by a mixed basket of high and low revenue generating devices. And diagnostics are just the beginning. And that's more than just a catchphrase. Through our network that we're building, both on the provider and on the patient side, we see an incredible opportunity to scale up our business by tapping into a wide number of additional and adjacent revenue streams. So how do we go there? Well, unsurprisingly, through financing. We've raised to date close to $800,000 in a first round. We're raising now a second equity round of $500,000. We actually closed 60% of it last week. And this is to help fuel our growth on new hires, technology development, operation support, and to drive supply and marketing. And we have what it takes to build an amazing business, from entrepreneurs to technology to medicine. Max understands the world of AI-powered diagnostics. Samir understands deeply operations. Sam understands healthcare in East Africa. And I understand how to build and scale distribution businesses in emerging markets. I've been a hands-on company builder and entrepreneur and investor in Africa for about over 10 years. And so to sum up, our vision as a team is to bring affordable diagnostics to millions of rural Africans, to bridge this diagnostics gap and improve the quality of care. And plug in, while digitizing this African clinic and plug in the innovations that make sense. So with your support, we can change health outcomes on a continent with massive needs, but also massive opportunities. Thank you.
Thank you. Great timing. Great timing. Fabulous, Emilian. I would like to pass the baton over to Piers and Vincent for any questions or comments.
So, Emilian, thank you for that.
Sure.
Brilliant. The numbers look very impressive. But tell me about the technology. The bit that I find myself worrying about is lots of devices taking lots of readings. They're going to slip on calibration. How do you ensure the quality of the diagnosis and that you aren't suddenly going to end up with a claim against you in the future?
Sure. Great question. We bring only FDA or CE-stamped devices. So we scout the work continuously to identify not the Siemenses and the Gs and the Philipses of the world, but rather the $1 billion startups making smart diagnostic devices plugged into a phone, located in the US, China, India, all of them with an FDA or a C approval. As soon as they get the approval, we bring them into Africa. And on the technology side, so we build think of it more like an IoT platform where we integrate in the cloud of those devices to, number one, be able to stop them, to turn them on and off, because we manage the assets. And number two, to get the data out of the device, which is super, super important, both for us as a company to identify what's going to be the next device, what are the reasons the patients go to those clinics, but second, for the future. As we've collected more than 150,000 patient data sets to date, and we keep collecting. And this is going to be super important for the next phases of the company, which I mentioned earlier, which can be pharma, can be data collection, can be lab, can be financial services targeting patients and clinics.
Got it. All right. Thank you. No, nothing else.
Okay, Emilian. I have to say that I've never seen such a quick presentation, because I think you've managed to present about 20 charts in 5 minutes, which is usually 1 minute per chart. So you've done really such a thing. That's brilliant. But at the same time, I had some hard time to follow everything. The only thing I got is that you've done already an amazing job. But I'm not sure I got it all right. So
maybe let me sum up. So we do 3 things. We are, think of an asset leasing company where you go and you need to do an ultrasound, an echography in Paris, right? And you're going to go to a clinic and they have this big machine which costs $50,000. In Africa, in those small medical centers, there are 15,000 of them. In all France, there are 1,000 clinics. In all Kenya, there are 15,000 mom and pop shops or medical centers. All of them small, and they don't have money to buy assets. So what we do, we don't bring the $50,000 ultrasound. We bring the the $2,000 portable ultrasound made by a $1.5 billion company in New York. We place it on a lease-to-own model in those clinics. We integrate into the cloud of the device to be able to turn it off and on if the clinic pays or doesn't pay, and to get a data out of it. And those clinics they can't buy the $40,000 machine. They can't buy even the $2,000 machine, but they can pay $250 a month. That's basically our business model. We buy an asset for $2,000. We add another tablet. We add a cable. There's $3,000. We lease it for $6,000 over 24 months. That's what we do. That's Ilara today. So it's a super high. It's an asset leasing applied to medical devices with a super high margin, with a very predictable revenue model, with a goal actually of getting data and a goal of covering a high number of clinics in multiple markets, but eventually to monetize this data through bringing in other assets, other devices, but also other service lines like pharma. We can plug in pharma in those pharmacies and clinics. We can. We're building small labs today, like miniature labs, to cover more demand. We look at those merchants, those clinics as a merchant. They're completely underserved merchants. They sell pharma and they sell meds and they sell other things. We really transform, we look at those merchants and we get them ready to be able to get financial services. Today they can't access a loan. So that's kind of the future vision of what we see. Today it's a very predictable, simple business model.
Amelia, a question from the audience that is relevant to this, which is, there are two types of lines of business, if you will. This coming from Brian Dolan in the audience. There's really a data company or a data platform company, and the other one is an asset leasing company.
Yeah. And
you've merged the two, and I understand why, and I'll come back to that in a second.
Plus the last mile distribution.
Plus the last mile distribution. So I guess one of the questions is, if you really want to scale it, you're going to need a lot of CapEx, right? So where are you getting CapEx today?
Sure.
And
that's a great question.
Go ahead.
Yeah, no, go ahead, sorry.
No, that's it. Where are you getting your CapEx today?
Yeah. So currently, as any assets leasing company in the beginning, we need to finance the assets through equity. So we raised $785 last year in equity. We had to buy the first assets. The 60 clinics today equaling about 70, 80 diagnostic devices at $3,000 per clinic. We had to buy them through equity. We're raising debt, so we are now in processing two due deals with debt funds, because in any asset leasing, you need to finance the assets with that. But that's kind of that's a vicious circle, right? You need more assets to get more debt. So what we're raising now, we're raising another equity round to get to cover the operational costs and then to continue building a platform. But in parallel, we raise debt to start covering the assets with that. And then obviously in the future, we'll put kind of Ilara is going to be two companies. It's going to be an OpCo and it's going to be an SPV, which will have all the assets. And that right. We'll raise that.
Which addresses Brian Dolan's question/comment suggestion of separating the two into different companies. Okay, great. Thank you, Brian, for the question. I have a couple of more questions, but Piers, Vincent, anything else from you?
This was a brief question. I think I got it very clear now. Now, I'd like to know what kind of when you enter a clinic, did the guy had some kind of device before, or is it really a first attempt to this kind of material? And what kind of competition do you have to face?
Sure. So when we go to every single clinic and pharmacy, they tell us, I want to have a lab, everyone. Now, some of them have some kind of devices, right? They may have old ultrasounds, 10 years, 15 years ago, which barely works. They may have an old blood test machines, which doesn't work. Most of them don't have anything because they can't access. All those small clinics make about $5,000 a month. 70% of their revenue is through selling meds. They have a pharmacy inside. Those clinics are bigger pharmacies and pharmacies are smaller clinics. So they don't have money to buy the assets. And that's why there's no access to diagnostics in those areas. Now, literally the competition is the medical device companies selling the big devices, the Philipses and the GEs, but they sell them to big clinics, to hospitals in Nairobi. We're in the outskirts. And you know, what's interesting in Africa, right, is that Nairobi has about 2.5 million people inside a city, but there are another 3-4 million outside, at 15, 20 kilometers outside. And that's exactly where we are. Medical device companies cover the city, the big hospitals, the mid to upper income, the 5% of our population. The 95% is uncovered. And that's exactly the situation in the other countries in Africa. We haven't seen someone doing exactly what we do, which is a mix of technology devices plugged into a tech platform, distributed last mile with financing. There are different companies doing one of those pieces. There's a company in Ghana which distribute small rapid tests to pharmacies. Great guys, but they're not tech devices. There are, as I said, medical device companies. They're targeting a completely different world, and there are technology companies integrating. We do this together, 3 in 1.
There is a question from the audience from Cynthia from Quora about how maintenance is handled and how you deal with obsolescence of the devices. Can you describe that a bit?
Sure. So I'll start with obsolescence. That's a really interesting question, because the way I look at those devices is exactly like we have this phone, right? And this phone was much bigger, much less powerful 2 years ago. And in 1 year from now, this is going to be replaced by another one, an iPhone 12, 13, whatever it's going to be. So the way we look at our assets, we know that our assets will, in 2 years from now, will be worth very little. So we lease them on 24 months. With that 8 to 10 months, we de-risk our assets at 8 to 12 months. At the end of the lease, the asset becomes the ownership of the clinic with 1 month payment. So it's a residual value. But we know that some of those assets will actually become, there will be a next generation of the assets. So we give the opportunity of the clinic to keep the asset with 1 month extra payment, or be replaced with a new asset. And this is really interesting, because that's how we want to keep them together, because otherwise our lease ends in 24 months. That's the obsolescence thing. The support, so all our devices are covered by manufacturer support for a year and full insurance for a year. We have a 2-year insurance which covers the asset itself for breakage and anything else for another year. And we have most of those devices actually are replaced. So the way we work with those startups, we replace them if they break. There's not much technical support for a small device. It's not a big machine with mechanical parts and a lot of things. I think and we really open the way we look at. We are a gateway for those new technologies into Africa, and those companies work like a Tesla. They don't have a distribution force. They don't have anything else. We get them into Africa, into Kenya currently.
Just a quick question. When you place your device in a clinic, I understand that the device belongs to you.
Yeah.
So if the clinic doesn't pay, you can take it back. Exactly. Now, what kind of do you increase the profit of the pharmacy or the clinic? Do you have some figures?
Sure. Sure, that's a great question. So typically, on average, one of those small clinics makes $5,000 a month. 70% of it is selling pharma, a bit of consultation, a bit of procedures. When we place a commercial asset, we can increase the revenue by another $1,000, $1,500, depending on the number of tests they perform. So a good example for ultrasound. Ultrasound in Kenya, in those clinics, is used mostly for pregnancy. Clinics charge $15 for pregnancy test. If they do 30, 40 a month, that's kind of what I do. They already added a lot of revenue to their current 5,000. So we don't eat from their revenue; we actually add revenue. So there's a complete interest for the doctor to use a device. We keep the devices on our balance sheet, so we lease them over time. The way we look at this model is it's going to become a diagnostic as a service. As soon as we start becoming comfortable to work with those clinics, what we want to do is to start charging them per test. And I think that's a really interesting part of the thing, because then it's a pure revenue share where clinics charges $15 for an ultrasound, for a test, for a scan. We take $5. Clinics stays with 10. I can't do today until I really understand the volume, and we can increase the volume of the test that the clinic does today. Today they do enough to cover the cost and to make a bit of a profit. What we want them is to make more. And that's where we can really transform this into pay-as-you-go, if you want. I want to do 40 tests, I'm going to pay Lara 40 scans or 40 blood tests or 40 whatever else.
So we're running out of time. Thank you very much, Emilian, for answering the questions, Piers and Vincent. What is your ask, Emilian?
So we're raising now, we're in the middle of a round of $500,000. It's a safe, same like we raised last year. With a
convertible note.
Yeah, it's a YC safe. Yeah, we call it a simple convertible note, right? It's a YC safe, 6 million cap, 20% discount. We raised already 60% of it, actually last week. We're in a number of due diligence processes with few investors on the equity side. On the debt side, we have a separate raise as well. We think actually increasing our round to get more equity and in parallel with the debt that we raise. So that's the there's a full raise. So we're taking any tickets at mid-size or even small size. What we want also, we look at investors who can help us because this business has not only medical, has distribution, medical, fintech, collection, asset leasing. So as much as we understand distribution really well, we have medical advisors as well. But literally, we look for investors who can also help us, not just cash.
Piers, Vincent, your thoughts as investors?
Well, I will have hard time to help you technically, but I really like your model and the distribution models that you have. I mean, personally, I'll be interested to know a little bit more about your financial.
Sure.
And potentially, I could be interested because I think you have really developed a very interesting model. This is absolutely not my core competency, but I see what you've done seems really, really interesting. I would be more, looking at the way you develop your device, because of course, technology is evolving very fast. So how strong are you in that area? But your distribution model seems interesting. So I'll be interested to know more about it, and then we can exchange by mail.
I'll reach out.
Thank you.
It's not for me, I'm afraid, mainly because it's not my market area, and I just don't understand the sector enough. You come across as a very confident entrepreneur. You know your market. You perhaps you're almost too slick. There's a little bit of me that thinks it's almost too slick. The way you sort of speed through it, and there's just something there that just isn't quite working for me. It might be as much to do with me as it is to do with you, but I'm just trying to give you some helpful feedback.
Sure, thanks.
Thank you, Piers. I think from our side, this is interesting because at Untapped in Kenya and in other parts of the world, we're trying to drive a very similar asset leasing and IoT model as what you're trying to do for medical devices, but we're trying to do that for water infrastructure and other consumer-related revenue-generating assets. And again, I really like how you're focusing on revenue generation. I think I'd like to explore a little bit more as well in terms of the valuation and the model. But I think what we can do right away is see if there's a way for us to collaborate on the SPV side.
Sure.
I think I might be more willing to pitch in some dollars to be part of the SPV or part of the debt financing than on the equity side until I learn more. But I think certainly because we are developing technology, IoT technology, as well as, I think we're all learning on the SPV side, what is the right legal structure, et cetera. I think we might be able to share some of that learning both ways if you are open to it. I should also note that I've made an investment in another company that is also focused on asset as a service, if you will, in off-grid refrigeration in Kenya. And I think that might be something interesting to share ideas on. So while I can't commit to a dollar value now, I think I'm very interested in potentially participating in the SPV. and certainly working together with our local team at Untapped to see if there's something we can do together.
100%, Jim. Actually, I built my past venture is one of the solar pay-as-you-go ventures in Kenya, so I can
solar pay-as-you-go. Got it.
Yeah.
Okay.
So one of the few. So I can share with you exactly how we structured it.
Okay. Perfect. Fabulous. And I think we should share now the results of the poll. I'm going to end the poll here and share the results with everybody. And it's interesting. We have about a quarter saying no, a quarter investing a medium amount, and another quarter investing over 100,000, and then the rest all over the place. So that's interesting. Congratulations. Thank you very much for presenting today. And we wish you the very best of luck.
Thank you. I'll reach out.
Thank you. All right. On that note, we're going to move on to the next presenter, who is Tesh. I'm trying to find you here in the long list. Hello, Tesh. How are you?
I'm good. How are you?
Very good, thank you. Would you like to start sharing your screen now?
Sure.
Great.
Cool. Is that clear?
That is very clear.
Okay. So shall I shall start.
Go ahead and start.
All right. So my name is Tesh Mbabu, and I'm co-founder and CEO at MarketForce 360, based off Nairobi, Kenya. So let's take a quick glance into the African retail economy. And what we see is that millions of field sales agents and retailers act as the first point of interaction between majority of consumer goods and service brands and hundreds of millions of African consumers. So managing these large sales teams and distribution networks is such a pain for manufacturers, distributors, and financial service providers. And this is due to a number of challenges. The biggest one being outdated data collection methods. So they use pen and paper, WhatsApp groups, and Excel sheets to collect data as they interact with customers in the field. And this leads to slow fulfillment of orders, error-prone data collection, and most importantly, these companies lack real-time visibility into how their goods and services are performing in the market. Consequently, retailers end up with more stockouts, and the consumers have challenges with accessing the goods that they need in a timely manner. So what are we doing to address this? We built MarketForce, which is an end-to-end and mobile-first field sales and distribution management solution. So we leverage on the power and ubiquity of the mobile device, allowing these sales agents to capture data as they interact with customers in the field. And in real time, we're able to give manufacturers and distributors access to this information through live web dashboards, where they're able to see who's buying their product, where they're buying it, and at what price, and what they're buying it in conjunction with, enabling them to really estimate demand and be able to more efficiently service their markets and improve their distribution channels. So if you look at our space, we have a number of players doing various things. The competitive advantage that we have is that we've built a system that is able to be used all the way from the manufacturer to the retailer. So we unify the fragmented distribution value chain, and we really built a solution for the African market. Since we started the company slightly over 2 years ago, we've been able to work with over 35 brands across East Africa, in Kenya, Uganda, Tanzania, and Rwanda. And we've been able to process over 200,000 transactions with over $180 million worth of transactions through our platform. So how we make money is through a subscription model, where we charge our customers for every active user of the system. And we have over 5,700 active field agents using our platform on a monthly basis. Last year, we were able to get a partnership with the largest telco in Kenya, which is Safaricom. And what we're looking to do is roll out a retail ordering channel to be able to allow retailers to order for goods and pay for them directly from their nearest supplier, and also be able to access working capital loans. So we have a team that is very aggressive and enterprising, with having experience worked in some of the top companies across the world, in key business process automation roles. We're looking to scale our service to be able to serve at least 1 million retail outlets over the next 5 years through a team of over 100,000 active field agents who will be using our system, and that will get us to $10 million in annual recurring revenue. So we're in the middle of a fundraising, a seed round of 600,000 in form of a convertible note at a 3 million valuation cap and 10% discount. But today we're here to ask for part of that round. So we're asking for 150K at double the discount, so at a 20% discount. That is in exchange for 6% equity in the company. And that will enable us to really roll out the retailer ordering channel, which we think is a big opportunity, both during this time of COVID and post-COVID. There's a massive opportunity to serve the African consumers in this way and solve the last mile distribution challenge. So thank you very much for the opportunity, and I'm happy to take on any questions.
Great timing, Tesh. That was very well timed at 5 minutes. Thank you very much. On that note, I'd like to pass that over to Piers and Vincent for any comments or questions.
Yeah, so happy to jump in. So thanks, Tesh. What's your biggest problem that you've got to face over the next 2 years?
Yes, so what we're building now is we've had to work with the companies that we work with really rather manually in terms of the process of onboarding and whatnot. So we're building a self-onboarding tool, and we feel that that will be the largest barrier we have to face to scale. So getting our product into a real software as a service business where we have more SMEs in terms of distributors and even smaller manufacturers learning about our product and starting to use it.
Okay, so I don't know whether that is your biggest problem, but if that's the problem that you think you've got to address, what makes you think you've got what gives you the reassurance that you've got the skill set necessary to do this? Have you tackled similar problems in the past and learned from those experiences? And can you give us some examples of that?
Yeah, so first of all, as we look into what we're doing is literally helping with business process automation for the distribution economy. And in the past, we've done a lot of business automation consultancy, but what we're looking to do in order to solve this problem is engage a team. So if we look at the 30 companies that we've been able to onboard to date, I was able to sell to those majority of those companies alone. So we just onboarded a very strong business development team, and now our head of business development actually comes out of us a really large SaaS company and background. So very skilled in inbound marketing for this space.
Okay, thank you.
Yeah.
Tesh, Vincent speaking. I found your presentation really good, very clear. You know what you're doing, you know what you want, you know where you're going. So I think that's really clear. So congratulations. I've seen many of those kind of tools in my experience in my previous life when I was running sales of different operations in different countries. So your kind of tools is obviously extremely useful and is changing a lot and involving a lot as well. So what kind of competition do you have in Kenya? Well, you put it on a chart, but why do you think your application is better than the other one in terms of value for money for the suppliers?
Yeah, so if we look at our competitive space, we have a number of players who, first of all, our consumers, a majority of them are still using either pen on paper or CRM systems that are not optimized for distribution in the African space. So looking at things like route optimization and geolocation, for example, of their customers and whatnot. So all these are features that we offer. We have also companies that are trying to build this in-house, but then they realize that it's quite some work. So we're providing a very affordable solution across the chain. And the reason we're building an end-to-end system is so that we don't offer just the software as a service, but we're able to offer additional services that make really our ecosystem unique. So for example, for distributors, having retailers ordering through our system provides them access to market, so they don't have to really think about that. And then having retailers also order gives data directly to the manufacturers of these goods, so they have real-time visibility all the way to the last mile, and they can optimize on that. So I think the ecosystem that we're building is what really differentiates us in the market.
Okay, clear. Thank you.
So Tesh, this is interesting. I wish you were in Haiti, because our Haiti operation, we could have very much used this tool to manage our sales agents to sell powdered milk in Haiti. But I think that leads to one of my questions, which is, how easy is it to move to another market if you needed to? And this is a very self-serving question, because I'd love to use this in Haiti.
Yeah, great question. So I think over the next few months, that's our key priority. And we've been able already to start serving clients in Tanzania and Rwanda, for example, where we don't have operations, but we're able to do onboarding online as long as the company we're working with does have a tech savvy team. And in the future, so we're really looking into how companies will be able to self-onboard and start using the tool. So our service is actually available also in Haiti, as long as you have a team that will be able to manage setting up, and we are able to do that, the training and help remotely.
Okay, very interesting. My second question is perhaps a sensitive one, but currently with COVID around the world and in Kenya and the travel restrictions, how is that affecting your business? And do you see that as a major risk if your customers aren't buying because they're confined or quarantined at home?
Very good question. So what we've realized is actually there's a higher activity for the customers that we already had on board, because they still need to perform their sales remotely. We have teams, for example, in the financial services space that are using our solution for telesales. What we started doing in the wake of COVID is we went into the healthcare space. We already got Ilara Health, for example, who is now a customer, and we're looking at really more companies that need that. And the second thing we're doing is, because a lot of the customers we're serving do produce essential goods and services, so the distribution of FMCG products, for example, continues. So we think it's a perfect time to take to market the retail ordering channel, where we have less cash transactions and people are able to order using our app and pay using the app. And really, it's a tool that will continue to work during COVID and post-COVID.
Has your business already been impacted by COVID? Or it sounds like you're saying that it's a positive impact for your existing customers, but part of this is really about selling. I think one of the challenges that I face with digital tools is convincing people that they need them, because you don't know what you don't know, right? You don't know the benefits of going digital, and it's a big commitment to go digital, by the way. You don't know the benefits until you've done it. So how do you intend to convince your customers or new customers to take on these tools?
Yeah, so in our primary market, which is Kenya, some of the things we're doing is forming partnerships. For example, what we've done with Safaricom, who have a very strong brand and already have access to majority of the customers that we're looking at. However, our product is a substitute for some of the tools they're already using, and in our sales process, we have found that a lot of customers are already aware of how digitization is really critical for them. So I'll give you an example of companies with field sales agents who churn and who are using for pen and paper, and that means they go away with all your customers and there's nothing you can do, and the cost of starting to reacquire customers is very high. So with our solution, as long as these guys are constantly collecting information through the app, that means if even a sales agent churns, then you still have access to your customer information. So there's a lot of education that might need to be done. However, I think we're in the digital age and a lot of businesses already understand why really it is important to digitize their processes.
So we have a similar comment from the audience, and it's a similar question to mine, but with a little bit more background and data from Michael Gray. Thank you, Michael. I'll just read his comment. Tanda tried to introduce a similar product, free device plus supplier agent app in Kenya, and was very difficult to get each merchant to adopt such methods, given the lack of digital skills of merchants and the cost of onboarding them and keeping them. How do you, so they ended up pivoting to offering only loans to merchants. How do you intend to overcome this in your model, given that most products need to be entered manually anyway?
So, sorry, I didn't fully understand. Do you mean retailers?
Yeah, yeah. I think Tanda was targeting retailers. You're not really targeting retailers, are you? But I'll let you explain that.
Okay. Yeah. So again, this is based on the ecosystem that we're building. We believe that's going to be the hugest advantage, because a retailer will not use an application just to collect their sales and digitize the process. But the minute you introduce working capital loads, for example.
Hold on 1 second, Tesh. Hold on 1 second. I'm going to 10 leaves a minute. And then I'm going to unmute you. Okay, somebody unmuted themselves and there was a lot of background noise. So go ahead. You're back on now.
So what I'm saying is really the key, what we need to do to take over the market is in the building of the ecosystem and offering value-added services other than digitization. So, for example, for a retailer, asking them to start recording their sales is not really important for them. But the minute you introduce the element of where we're going to be able to offer you working capital if you're recording your sales, then that tilts the whole equation. And the same applies for distributors. So rather than telling them that they're digitizing how they collect orders, you're telling them that I will start generating orders for you, or I will help you to get working credit from your manufacturer, for example. So these are the elements that make our technology really more than an enabler, but are key to them being successful businesses.
Okay, thank you. Well, given in the past, peers of Vincent have started, why don't I jump in with my, well, let me ask you, so I think your ask is clear, which is you want us to participate in this round in your convertible note with a $150,000 investment and 6% equity. So from my side, I am a little bit concerned about what's happening with COVID and what it might mean. That may not be fair to you, but I think cash is always difficult, and I wonder whether you have enough cash to ride out the uncertain length of this COVID crisis. So I think that would be one of my concerns. All that said, I think we'd be very interested in working with you in Haiti to use as a customer of your product. And as a customer of your product, over time, we can continue to have the discussion and see if this makes sense to make an investment. But this is certainly a product that meaning Delo Haiti in our operation in Haiti, would certainly need. So love to be your first Haiti customer if you're open to that.
Great. Okay. Cool.
Pass that on to. Thank you.
From my side, I don't think 150,000 is going to see you through. You need to be asking for a bigger sum. I think it would be money, good money chasing bad money, I think. So it's not for me.
Okay. Yeah, just to clarify, our seed round is 600K. So I made a 150K offer for this.
Yeah, I get that.
Yeah.
Thank you.
Thank you, Piers. Thank you, Tesh.
Quick feedback as well. Well, I think you're doing something really interesting. Now, I'm putting my money on things which make some impact, as environmental, social. Here, I don't really see it. So it's not that I don't like what you're doing, but I've done this for many, many years. So now I'm moving to some other things. So good luck with this. I'll be more interested to look at the health stuff that we've seen just before. Sorry for that.
No problem. Thank you very much.
Thank you, Vincent and Piers, and thank you, Tesh, for presenting. And I do wish you best of luck in the COVID times. I should note that there are different donors and even investors who are now putting together emergency funding vehicles for helping small and medium-sized enterprises like yours access capital. I wonder if accessing some of those would be useful, because I think, again, if I were in your shoes, and I'm sure you are thinking about this, but we don't know what's going to happen over the course of the next 9 months with field sales and sales in general. And I could see how virtual sales might be aided by your product. But again, I think it's going to be potentially a trying time. So I wish you the best of luck. And just to let you know, I'm going to give everyone just a couple more seconds to put in their votes, but we have 29 out of 53 voters who have voted on Market Force 360. And I'll give you a couple more seconds, and then we will end the poll and show the results. Okay, just one more second.
Yeah, and Jim, just
yes,
to add on to that, we have raised 30% of the funds we're looking for, and we're generating enough revenue to see us through at least 12 months from now. So
okay,
we're good to go with that.
Okay, well, that's good. That is very good news. It's very good news, and fabulous to hear. And again, I'm very interested in being a customer of your product ASAP. And it's good to hear that you don't see cross-border adaptability or cross-border issues as a limiting factor. So I'm looking forward to seeing that. Okay, I'm going to end the poll now and share the results with everybody. And as you can see, we have a bit of a mix. We do have 17% with a strong endorsement, but also a good number who in the middle and at the lower end as well. So thank you very much, Tesh, for your participation. And I'm going to stop sharing that now. And again, I think the kind of tools that you are building are really, truly important. And I also appreciate the fact that you are adapting something that we know is valuable and useful, Salesforce essentially, but adapting that to the African market. I think personally there is a tremendous amount of value in adapting tools such as CRM and Salesforce management to developing markets use cases. And we all know that they're very, very different than what we use them for in the US and in Europe. So kudos to you for going down that route. All right, so on that note, any final words from you, Vincent or Piers, before I end the meeting?
No, thank you very much. It's been good fun.
Great. Thank you, everybody, for joining us. And
thank you, Jim. I really found this interesting. Little fast, but really good.
I hope
and now we have switched to a new poll here on will you attend the Nest again? Please feel free to vote as you would like. And we will leave this on for another couple of minutes as we go. But overall, I want to thank you. I would like to thank everybody for attending our inaugural The Nest show. And again, we will be having another show next week and the week after with new entrepreneurs from different parts of the world. And I do hope to see you again. I'm Jim Chu, and thanks for attending. If you would like to pitch, please feel free to this is a message to Eugene. If you'd like to pitch, please feel free to apply via WhatsApp. We ask for a 30 to 60 second video sent to the WhatsApp number listed on the website at findthenest.org.